Hi guys, welcome. Can you guys hear me? If you would pop over to your chat box and let me know that you can hear and see my screen. That would be fantastic. We're just going to give people a couple minutes to continue joining in. Awesome. Anthony, thank you so much for letting me know that you can hear and see my screen. Fantastic. All right, well, I have 131. Let's get started. So thanks for joining me this afternoon. We are going to continue our series, How to Get Started as a Passive Investor. Today, we're going to go over understanding the different fees of a syndication and which one applies to you when you invest with Goodegg. So if you haven't joined for these series previously, these series are for you. They're not for me, they're for you. It's for you to build your education and get really comfortable with all the different terminology of a syndication and how they function. But more specifically, what we're going to cover today, again, we're going to touch on those two big myths that investors have regarding syndications. Then we're going to dive into the 7 different fees related to a syndication investment. And then we're going to learn which fees actually apply to your deal. And if you can't figure it out, how you can do so, okay? And again, these series are for you. This is for you. Like if you've tried to invest in syndication before but got cold feet, or maybe you invested in one before and made a mistake, or maybe you're just like, you want to invest in syndication, you just feel so overwhelmed by all the different information out there, some of it conflicting. This is what we're here for. So this is a great opportunity for you to make sure, if you haven't done so already, find that chat box, because I want you asking questions throughout this series that we do. And please don't hold on to your questions. I know some people are like, oh, the Q&A is at the end, I'll hold my question till the end. No, go ahead and type it in there. If I can answer it during the flow of the presentation, I will. Otherwise, we will stay on the line and get all your questions answered. So let's dive in. The top 2 myths that investors have, the biggest one actually, that keeps them from sideline and from investing in syndication, is they think they have no control over the actual terms of the investment. And this simply isn't true. And I will go over a quick recap on why I say this isn't true. But more importantly today, what we're going to be focusing on, the fees, taps into the second biggest myth that investors have about syndication, is that they actually won't make that high of a return if they invest in syndication, which again is just simply untrue. So if you haven't been here already and you don't know me, let me kind of clue you in a little bit on my real estate journey. This is me and my crazy family. This is our last big adventure foray out of the country, but I love real estate because it allows me the time to spend with my family and for us to travel. I started out my journey in 2002 doing live-in flipping and house hacking. The terms weren't even created then. So, but anyways, I did a couple projects on my own, and then my husband joined me, and we did a couple more, and then we just realized we were building on piles of cash, but we didn't have cash flow. We didn't know how to actually make our money work for us. And so we paused and we filed that traditional narrative. We got married, bought a house, had a child. And then it was really in 2016 that we decided, like, hey, we've got to figure this out for ourselves. We have to be able to buy hard assets that supplant our retirement. We have to be able to build cash flow to allow us to live our lives how we really wanted to live them. And so fast forward, we built a portfolio of about 30 single family homes. We did a lot of, we started off with turnkey, then we got into what we call burn investing, so a lot of rehab and investing. And then my husband was like, you know what, that's fantastic. You have gotten yourself out of your job. I went out of mine. And I was elated when this happened, absolutely elated, and then terrified at the same time, because it was like, oh my gosh, now I gotta like get up to 80 homes. And so we really felt like there was a better way to do this. And so we started moving into what we call the general partnership and limited partnership of multifamily investing. And fast forward, I've been with Goodegg for just almost a little over a year, coming up on a year and a half, but just in the past 2 years with Goodegg, we've done over 24 deals. We have over 6,000 units under management and over a $700 million portfolio. But what I get to do every single day is work with you guys, our investors. And so we have over 600 investors. And again, our investors regularly repeat with us. We provide an amazing product and, and are able to provide stable returns for our investors. Again, allowing them to get back their time, create passive cash flow, build equity, and get back to what's most important in life. And if this is your first time joining one of these webinars, we have been extremely busy this year. These are just a few of the things that we've done. We've published a book, we've put out a podcast, we've attended so many different conferences to be able to connect with not only our operators that we work with, but you, our investors. And then of course, we've also visited many of our deals this year. So let's do a quick recap of what we've covered in this series today. All right. Now, hang with me. If you have not seen all these videos, I will send a replay link of this video out today. And it will link all the other videos that I've done as well. So what we've covered so far in the series are the 4 tenets of conservative investing. We've also covered the 3 secrets to actually controlling the investment, believe it or not. And then also a 5-minute quick underwriting tool just for you. That's in one of the series. Then we tapped into the 3 different types of returns that you can earn with passive investing. We also broke down the whole capital stack as far as like who's on the debt side of a deal, who's on the equity side of the deal, who's priority, and who has the highest risk in the deal. We broke down that whole capital stack for you. And then we went into the 3 biggest risks of passive investing, all right? And then 13 ways that you can actually mitigate this risk. We also dove into a couple of episodes ago, the tax factors of real estate, okay? I don't like to say pros and cons because it really depends on what your particular situation is, if it's a pro or a con. And then last episode, we dove into the 3 ways to fund your deal, all right? And then we actually kind of gave you a little bit of a decision tree on how to figure out how to fund your next deal. So again, you're here for you, you're not here for me. So let's get you to the bulk of today's education, which is understanding the different fees of passive investing, okay? Again, if you're just now joining in, make sure to find that chat box because I want you asking your questions in real time. Don't hold on to them, and we will get everything answered for you today. All right, before we get started, disclaimer, disclaimer, disclaimer. This is for educational purposes only, okay? So we are not a legal, financial, or a tax advisory firm. If you have any questions related to related to your specific situation, just please know that you need to consult with legal, financial, or a tax professional for all that type of advice. Additionally, whenever you look at any of our pro formas, if we've talked to you on our phone and we've been able to share a deal flow with you, we don't include tax assumptions into any of our projections. So I just want you guys to know that up front. All right. So let's take a big breath and then let's pivot. All right. So why are fees actually included into a deal? Okay. Why are we having this conversation? Okay. What did the different fees actually indicate to us on the deal? Well, one, we're looking for alignment. Okay. Are you and the sponsors aligned for performance? Okay. So this is a root question as you look through the investment summary and the PPM. A question that you want to look when you look at all the different fees that are being charged in the investment, are they creating alignment? Okay. Are you and the sponsors rowing the same boat together? All right. So 2, is your money or return being feed to death? Is it going to 0? That's one of the largest issues that I have with the stock market is it's whether my particular investment, mutual fund or whatever, or my advisor makes a fee, whether that asset performs or not. So I have a problem with that. Okay, and that then kind of tailors back into that alignment piece. Also, when you look at all the different fees in investment, you're looking at an investment summary. Another huge central question you want to ask yourself is, do you understand what your net return is? Not your gross return, but your net return, okay? All right, that's after all expenses have been taken into account. So let's go over the different types of fees. There's 7 of them that are pretty typical for investments. The first one is the acquisition fee. So this is actually what it costs to purchase the property. All right, think about all the legal work that has to go into play, all the all the labor that had to incur to find that particular property. That goes to help cover the acquisition fee. And it's when you look across all syndications, industry in general, that fee typically is 1 to 3% of the purchase price of the property. Okay, it's in addition to any commissions that might be charged, realtor commissions. Right. The second fee is the asset management fee. Okay, so this is what it takes to actually manage the asset on top of day-to-day operations with property management. Okay, and this is typically between 1 to 2% of the gross income of the property or on total capital raised. And that's going to vary deal to deal. Okay, every operator is going to structure that a little bit differently. Okay, so even though you might have property management, there's some overlaying responsibilities as far as asset management. Then you could have, if you're doing a rehab on the property, there could be a construction management fee. And, think about that. There's somebody that has to oversee all the contractors on the property. And that particular fee is typically about 5 to 10% of the total planned construction budget. Again, that goes to the team that's actually going to oversee the management of the construction on the property. All right. Then there's an equity placement fee, or there could be. An equity placement fee is typically 1 to 2% of the total investor capital that goes into the project. All right. Fee number 5, the loan fee. Okay. So somebody has to help secure the loans. And on some projects, we have what we call a key sponsor. And that key sponsor might actually charge a fee. They're pledging their assets in order to close the deal. And that loan fee might be 1 to 2% of the total loan amount. All right. Then we have a refinance fee. So, we go through a value add business plan. We've rehabbed the property. In our particular case here at Goodegg, that particular rehab takes about 2.5 to 3 years to complete. We've moved all the rents up to market rent. Majority of the units have been renovated. Then we're going to take that property back to the bank and either do a refinance or get a supplemental loan to pull capital tax-free out of the project. Okay. At that particular point, all the labor and the paperwork that goes into actually completing that process, it usually has layered on a refinance fee of about 1 to 2% of the total refinance loan amount. Okay. Then you've got disposition. So if you're selling the property, in our case, we're selling the property at the end of, most of our properties are 5-year pro forma time. We have one that's up to 7. That there would be a disposition fee, all the labor that goes into actually finding the buyer, putting together all the legal contracts, jumping through all those different hoops in order to actually sell the property. And that again is usually 1 to 2% of the total sales price that goes in to cover all those expenses. All right. So just a little asterisk, it's pretty rare. We went over 7 fees, guys. It's pretty rare for an investment to have more than 4 fees. Okay. Why is that? That goes back to this slide that we talked about here, is if a sponsor has in, say, all 7 fees in their pro forma, do you have alignment? That would be the question I'd be asking myself. Also, are you really making a return on the property? Okay, so I think it's pretty rare for a really good sponsor to have more than 4 fees. And if you don't know the fees on the project, whenever you are looking to invest in a project, if you don't know the fees, make sure to ask the sponsor for clarification and an explanation, because you really want to understand what those are. All right, so let's transition into what we do here at Goodegg. All right, so what we do here at Goodegg, we typically have 4 different fees that are related to our deal. Now, the cool thing that we do for our investors, we love educating our investors. We want it to be amazingly transparent and easy for you to understand what is happening in your deal, okay? So anytime you read any of our pro formas, that pro forma is net of all fees. So when you see a cash on cash return or a preferred return or even the projected IRR, that is after all fees have been removed, okay, and paid throughout the project. All right, so let's go over the typical fees that we typically see in our investments. So we work with our sponsors, our lead sponsors. We negotiate to bring down that acquisition fee, okay, what it takes to actually purchase the property, to about 1 to 2% of the purchase price of the property. We also work to negotiate down that asset management fee to typically between 1 to 2% of the gross income of the property. Okay, we generally don't do it on total capital raise. However, I left that in there because at a future date, if that changes, I just wanted to make sure that, we kind of had our bases covered, but we generally do it on the gross income of the property. Also, in order to create alignment, we're investing alongside of you. So it takes, a lot of effort to buy the property, manage the property, and then to go through the different hoops of refinance and disposition. So we only do 2 more fees, and that's whatever it takes to get it refinanced and to get it sold. All right, so our 3rd fee is the refinance fee. And again, that's typically 1 to 2% of the total refinance loan amount. And then the disposition fee, what it takes to actually sell the property, all the labor, anything that we have to do contractually, that disposition fee typically is 1 to 2% of the total sales price. Again, most importantly is, you want to make sure that whatever fees you're looking at in the project, you want to make sure you're aligned with the sponsor, that you're not being feed to death, okay? In our case, you're not. And then also that there's total transparency and you know what your net fee is, or excuse me, your net return is. What is that going to be after all fees are removed? All right. So let's talk about that return just a little bit. On our projects, we aim to yield a 8 to 10% cash on cash return. Okay. We offer a 7 to 8% preferred return for our investors. Okay. Again, that's all net. And then we also look on the back end to do a 70-30 split with our investors upon the sale of the property, which generates about another 8 to 10% return. And again, that is net to our investors. So most of our projects, we're aiming for an internal rate of return of about 16 to 20% IRR. Okay, again, net to our investors. All right, so I'm gonna take a big breath. We've covered a lot of ground in a short amount of time. We've recapped this, we went over the 7 different fees that could play into a syndication investment. We took a look at the 4 fees that are pretty typical of our investments here at Goodegg. We also looked at the 3 reasons why it's very important for you to understand what is actually being charged to the investment as far as fees. So, what questions do you guys have? I would love for you guys to jump over into the chat box. Let's start getting those questions answered. Additionally, I want you to also, if this has sparked anything else that you would love for me to cover in future episodes, drop that in there as well. Because again, these webinars are for you, they're not for me. I want to make sure you're fully comfortable with syndication investing and passive investing. So I want to understand what it is that you would like to learn about. So again, jump over to that chat box and let's get your questions answered. All right, question came in. Why those fees as opposed to the 3 that you don't favor? It's not necessarily favoring. it's just with our particular projects, you know, the construction management fee, equity placement fee, and the loan fee, especially with the loan fee and the equity placement fee, those two, for me personally, I'll just speak for me personally, when I see those fees charged into a syndication, I go back to that number one question, why? Like, am I aligned with the sponsors? Okay. I don't feel alignment there, honestly. That's just my particular personal opinion, but that is the reason why we do it. So when we go back to the 4 fees that we do charge, essentially it's for the transaction on the property, right? It takes a lot of time and effort. I mean, when we put out a deal, you have to think about it. We probably have underwritten at least 20 to 30 deals and probably done far more due diligence as far as like combing through deals above that. So there's a lot, when we actually put a deal out to our investors, there's a lot of effort that goes into that, the work behind the scenes that you haven't seen. And then again, you know, just staying on top of the asset management, making sure everything is running smoothly, and then all the labor and intensity that goes into doing a refinance and a disposition. Those are the type of fees that I think are, you know, keeps us pretty darn aligned with our investors. Loan fee, equity placement fee, for me personally, I don't feel that huge alignment. And then also the construction management fee, I would like to see that actually managed a little bit better if an investor, or excuse me, if a sponsor actually has that in there. Could they actually, I want them creating efficiencies, not actually charging more fees on top. If the projected return is calculated net of all the fees, then as long as the returns are there, why do fees matter? Well, yeah, exactly. So yes, if your pro forma is net of all fees, that's the question to ask, right? You need to understand, because not all sponsors actually put all the fees in the pro forma. What they'll do is they'll show you a return, and they'll say, like, you know, the return on this project is 10% cash on cash or 11% cash on cash. Well, when you dig through there might actually be a 2% asset management fee. Well, your return's not actually 10% or 11% cash on cash. It's actually 8 or 9, right? So it pulls down the return. So it's kind of like sales and marketing a little bit. You know, again, we are driving for that huge transparency. We want to make sure that people totally understand what it is that they're buying into or investing into. And you know, and I think there's a lot of great sponsors out there that actually do this alongside of it, you know, sharing our same sentiment of transparency. I've seen others that don't. So that's just my personal opinion there. But again, if you don't fully understand what fees are being charged to the project, again, you have to ask. You gotta ask. All right. What other questions do you guys have? Again, jump over to that chat box. I want you guys typing them in, and we'll get your questions answered. But more importantly, was this useful? Did you learn something today? All right. Or were you reminded of something? Drop that in the chat box as well. Okay. And if you haven't already done so, make sure that if we haven't personally hopped on the phone and talked to each other, make sure you go to join the Goodegg Investor Club. Okay, so you can go to this website, goodegginvestments.com/invest, and you can apply there. Okay, again, if you're not getting deal flow from us, make sure to reach out to me, and we'll double check that you're actually in our system. And if we haven't had a conversation, that's probably a pretty good clue that you're not on our deal flow list. But make sure to go and apply for the club, and we can have a conversation from there. And if you're wondering, is the club for me? Like, should I do this? You know, it's our Goodegg Investor Club. We share so much information with our Goodegg Investor Club, and it's great for anybody that's just starting out, or if you're doing this on the side, or you haven't invested in a deal yet. This is the perfect thing for you, because we actually can help you out with that. And even if you're a pro or you're doing this full time or you've invested in several deals as well, you know, again, hop into the Goodegg Investor Club so we can share our deal flow with you. All right, a few more questions that come in. I'm gonna put the slide back up here to remind you guys what I would love for you to do. When does the acquisition fee take place? Are the funds taken from the investor's pool? Ooh, great question there, John. Usually gets charged onto the profit and loss statement, and the acquisition fee is actually charged after the close of the project. And I can actually get you a full, it varies deal to deal. I've seen a couple different deals do it differently, but you know, John, we can connect offline. I can get you more details on that. All right. Oh, thanks, Kenneth. Oh, you're not a problem child at all. I love investors that have questions. That's the coolest part of my job is I get to talk to you very cool people every day and get to understand what lights you up and help you guys get there. So I'm happy to do it. I'm happy to educate you guys, help you guys through a deal, answer your questions. All right. All right. What other questions do you guys have? Or what other topics would you like to see covered? Throw it all in there. No ideas too crazy. All right. And for those of you guys that need to drop off at the top of the hour, if you need to transition to something else, here is my contact information. Again, my name is Whitney. I'm the Director of Investor Relations and Operations here at Goodegg. And I'd be happy to connect with you and see if we are a good fit for your next investment. Thanks so much, guys.